This is the estimated tax options and sales tax history dialog. When your client collects $200,000 or more annually, they are required to pay estimated tax at 60%. Check the box at the top of the dialog under the Options and Defaults for New Returns tab to drop in the estimated tax on new returns automatically. The Florida DOR allows 3 different methods to calculate estimated tax amounts: the average liability method, the same month as last year method, and the next month projection method. The average liability uses last year's collection history to calculate the average tax liability, which is displayed at the bottom of the dialog. The average liability is generally the baseline for the minimum amount of tax that the DOR allows on each return if you are using the projection method. Also, at the bottom of the screen, you will see the current year's average liability, starting with December's return filed in January. The current year's average liability is used instead of the last year's average liability when you have chosen to use this method. For some odd reason, the DOR requires this change in December's return instead of waiting for it the first period of next year's return to make the change. The same month as last year method calculates estimated tax at 60% of the same month as last year. Under the collection history, this month is marked by a green S to indicate the current period that you are paying estimated tax for. For September's return ending 9/30 this year, 60% of October's return last year would be calculated as the estimated tax on September's current year return. It sounds confusing, but just remember, estimated tax is paid a month in advance. The final method is the projection method. This method allows the taxpayer the most control over the amount that gets paid to the DOR each month. The third option, to use the following projection on unfiled returns, allows the client to plug in the value at 100% or at 60%, which will be used as the estimated tax for the year. The 100% amount can be compared to the average liability amount at the bottom of the screen to ensure compliance is achieved. Once you have chosen how you want to calculate estimated tax, enter the collection history of the returns you filed last year. A indicates the amount is included in the average liability method. S indicates the same month last year. Options and defaults for new returns can be changed mid-year, and returns that have already been e-filed or the red copy printed will not be affected by the change.